Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, June 9th, 2021. And our top story today, interest rates on federal student loans will rise in July. Well, joining me now to discuss this and a lot more, Betsy Mayotte is the president and founder of the Institute of Student Loan Advisors. Betsy, so great to see you. Thanks so much for joining us on the program again this morning.
Good to see you too.
Yeah, before we talk about the loan interest rate for student loans going up in July, first, how is the advisor boot camp, the student loan boot camp that you've been running over the last several months?
Oh, great. So as I think we talked about before, I've been offering a 3-day student loan boot camp to help people that work with consumers that have student debt be able to counsel them. So in this 3 days, you learn everything you would ever need to know to answer just about any question you get from a borrower. So, and the response has been great. We're actually offering another class in June. I believe it's the third week of June. And I'll be sure to send you the link to that in case any of your listeners are interested in signing up.
Well, good. Well, congratulations on the success there, and a lot of people obviously interested. So, Betsy, we got word that, we personally just didn't, but we all got word that the interest rate for student loans, federal student loan interest rates, going up July 1st. And I guess my first question to you is, what does this mean for current borrowers and also future borrowers?
Really good question. I'm glad you asked because I think consumers may have some confusion around this. So I'm glad to be able to clarify. So if you already have student loans, and unless it was a loan that was made prior to 2006, your interest rate's not going to move because your interest rate is fixed. Where the interest rates are going up are for people that are going to be borrowing a loan on or after July 1st of 2021. So interest rates are fixed, but the rate changes based on when you took out the loan. So if you took out a loan last year, before, where the first disbursement went out prior to June 30th of this year, and it was a Stafford loan, your rate is 2.75, and it's always going to be 2.75. But if the first disbursement of a new loan goes out after July 1st of this year, your rate's going to be 3.73, and it'll always be 3.73.
Yeah, that's important to know, and that is obviously an increase, and it's based on, my understanding, it's based on the May 10-year Treasury auction rate, right? So that's how it resets. It resets what, semi-annually? Is that correct?
Annually.
Annually, you said?
Yep, it sets annually, and they base it on the last auction in May for the 10-year Treasury bill.
But relatively speaking, several years ago we had interest rates that were much higher. I think closer to 5% if my memory, which is going, serves me correct.
Oh, for sure. So between, I think it was 2017 and 2019 loans that were made in that window, yes, the rates are in the 5 range. And if you go even earlier than that, so loans made prior to 2006 are variable rate loans, and they do have a cap. They can't, depending on what type of loan it is, they can't go any higher than 8 or 8.5%. But those have gone as high as 8 or 8.5%. And if you go even further back in the history of student loans in the 80s, again, the rates were variable. And especially for parents or graduate students, the rates could get as high as 12 and 14%. So these are still relatively low.
Yeah, I'm sorry, Betsy, for cutting you off. I guess my next question is, what about refis? We've talked about what happens if you refi and if you do that, a private loan versus a federal loan, but is there impact there as well? Would you see a higher rate, I would assume, there too if you refied?
I think that's probably a good assumption to make. The interest rates on private student loans and private refinances aren't necessarily based on the same Treasury bill. They might be based on something else, but usually if one starts to trend higher, then the other is also going to start to trend higher.
Yeah. And Betsy, you and I have had, throughout the time we've been talking over the last, 12 plus months, this always kind of comes back to what the issue is. And the issue around student loan debt is that the cost of college tuition going up significantly. Now, what would be the potential impact here? We have rising rates, which seem part of the natural course of you look at the 10-year Treasury auction note, that seems natural. Would you see a corresponding move perhaps with the cost of tuition, or would you expect tuition this fall to remain flat, just given the circumstances? We're almost post-pandemic, kids are returning back to school.
Right. I don't necessarily see the interest rate trend affecting tuition, but I do think that other things are going to affect tuition. There are some schools that, because of reduced enrollment, they're hurting for money. So that might result in an increase in tuition. It could also, on the other hand, depending on the school strategy, could result in perhaps a reduction in tuition to try to encourage enrollment. But enrollments are definitely down with colleges and universities. And that, I think, is more likely to affect the rate of tuition one way or the other. The other factor to look at, especially with private colleges and universities, is we should be watching what's going on with Congress. I do think, the Biden administration has really been pushing their proposals for free community college, debt-free public education. And if Congress takes up those proposals and they look like they have some legs, that also could affect tuition, just for competition purposes, in the direction we want to see it go in, which is lower. So that's something we should be watching as well.
Yeah, and that's a perfect tease, because when we come back, Betsy, I want to talk to you about these frozen payments that are due to end, I think, in October, if I'm not mistaken, or sometime during the fall. And also we'll talk more about student loan forgiveness. Let's take a quick break. We'll be right back after these messages. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Betsy Mayotte of the Institute of Student Loan Advisors. Betsy, thanks as always for staying around with us this morning.
Yeah, no problem.
So, we had a great conversation about this increase, what people need to be thinking about. That when I say increase, the student loan interest rate increase, it's going to be effective July 1st. I think the larger issue beyond just student debt is the freeze in payments that was put into place as a result of the pandemic, and I believe it's due to end October 1st of this year, so not too long from now. People need to be aware of this, that potentially they're going to have to make payments again. I want to get your thoughts on this.
Yeah, I'm really concerned about this. So the COVID waivers are due to end September 30th. And what we're looking at is 42 million federal student loan borrowers all re-entering repayment at exactly the same time. So to put that in perspective, in a typical year, about 9 million borrowers re-enter repayment, but that's over 365 days. We're looking at 42 million all restarting on October 1st. So I have some significant concerns. Number one, about the bandwidth of the loan servicers in the Department of Education to be able to handle this. I know that both the servicers and the feds are working really hard to try to prepare for this, but you just can't staff for something like that. So I also have concerns about borrowers being ready to re-enter repayment. Back in December, when we thought the waivers were going to end in January, there was a couple studies done, a couple surveys, and only 21% of borrowers at that point felt ready to resume repayment. Now, hopefully, things have recovered even more since then, so hopefully that number's changed, but that's still a really, really low amount. And you combine that with the sheer volume of it, and I'm concerned about long wait times. I'm concerned to get answers on the phone from the servicers. I'm concerned with long wait times to get paperwork for, say, a lower payment option processed. It's actually it's funny that you brought up the boot camps in the first segment, because that's one of the main reasons I'm offering these boot camps, is try to expand the number of people that are out there that can help counsel these borrowers if my fears come true.
Yeah, and just thinking about the practicality of doing this administratively, and I just go back to the federal stimulus payments that I believe it was the Internal Revenue Service that was sending those out, the stimulus checks, and how challenging it was to do that. On the flip side, now you're basically restarting the amortization schedule, you're restarting receipt of payments. There's a lot of machination that has to happen behind the scenes. What are you hearing in terms of maybe, you mentioned, and we'll get the student loan forgiveness in a second, but what about the machination? What about Congress, maybe the regulators kind of stepping in and saying, okay, we can't all do this for 42 million people on day one. Do we step this out a little bit over 30, 60, 90 days to make sure that we can handle this practically?
I don't think extending it, no matter when you end it, you're going to have 42 million borrowers all re-entering at the same time. But I do know that the Department of Education is talking about ways to ameliorate it. And this is just chatter that I've heard. So no one should take this as this is what's going to happen. There's talk about whether they could not have everyone re-enter at the same time, just some at a time. There's also discussions about, some of the ideas that I've put forth is maybe ceasing negative credit bureau reporting and new defaults for at least a year until all this manages to sort of shake out. And I know they have a laundry list of ideas of things they could implement to sort of ease what this tidal wave is going to be. So we're just going to have to wait and see what they end up doing as we get closer to September. I do know that they have an enormous and robust communication plan so borrowers aren't caught off guard. And I think we're going to start seeing a lot of those communications maybe as early as the end of July, definitely by August.
Betsy, we're looking at $1.7 trillion of student loan debt and the impact economically. And I want to get back to this forgiveness conversation that we've been having both on this show with you in past appearances, but also in the first segment you alluded to this and throughout this current segment, this student loan forgiveness. So the impact here, if you come out of college with a significant amount of student loan debt, you may live with your parents. It follows through. We're not just talking about younger people with student loan debt. We're talking people my age, in their 40s. Even parents or grandparents who are co-signers on these accounts have student loan debt. Because of the economic impact, I mean, obviously you want to make sure that the federal government gets repaid, the borrowers or the lenders get repaid, but what types of things are being batted around in Washington, D.C. to even consider forgiveness?
You know, the conversation for forgiveness, I think, has changed. I think it was very telling that the president's budget proposal did not contain a proposal for loan forgiveness. His messaging has been consistent, that he supports it, but he feels that it's Congress that needs to do it. And as I've said to you before, I'm not sure that even all the Democrats agree that broad student loan forgiveness is the right solution. It's an expensive proposal. Even if they just did $10,000 per borrower, that's $300 billion, which is a very expensive in any budget. I'm starting to see more conversations about perhaps permanently lowering the interest rates, which in my discussion with borrowers, I've talked to a lot of borrowers that would actually support that over forgiveness, because it would actually have a bigger positive effect on them financially. But, you know, the conversation has definitely changed a little bit with forgiveness. And, you know, I think the odds of us seeing broad student loan forgiveness continue to dwindle.
Yeah, well, I mean, Americans are from by all accounts, you know, I'm reading stories, tons of stories of Americans of all ages having to pay down. And it's a balancing act between buying a home, saving for retirement, paying student loan debt. So there's a lot for discussion here. And I know, you know, in talking with some of our other contributors, there's other legislation being considered, retirement legislation, that has an impact to the budget. So a lot of these things, I guess, get vetted during the summer, and then we go into election season. Here we are, you know, the Congress will be up again in 2022. We have a third of the Senate class up, and so senators and congresspersons, people will be running for re-election. So that this, you know, may not be on the, it may be an election issue, but it may not be on the docket for actual legislation. I guess we'll have to wait and see. Well, Betsy, we're going to leave it there. Really appreciate you coming on the program, and thank you so much for popping by, and congratulations on the great success of your boot camp. Really excited to hear more about that in future appearances.
Well, thanks for having me back. You know, I love talking about this stuff.
Absolutely. We can tell the passion. Have a great rest of the day. We'll talk to you very soon.
Okay, you too. Bye-bye.
And that wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow for another edition of BRN AM. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.